Thank you, Mr. Matt.
For sure.
Wes, that's Riley out taking a large poop in the Riley.
Hewlett Packard Hewlett Packard Enterprise. So Papa Echo reporting its Q1 revenues at 6.8 billion US dollars, below the 7.1 billion expectation. Earnings for HPE at 48 cents. Hotel Papa Echo. HPE guiding its second quarter results sees revenues in the range of 6.6 to 7.0 billion US dollars against 7.1 billion expectation. Also sees non-GAAP EPS.
Oh, let me shut some stuff down here. Hold on.
36 cents.
I gotta close that.
41 cents per share against the 44-cent estimate.
Riley delayed 10K. Oh, that was the news? Damn. Dell beats by 50 cents. HPE cuts guidance. Zscaler, they're out. What else is there? Vive is out. Joie de vivre. Where's Joie de vivre? That's such a good stock. It's down? That's a buying opportunity. Oh no, it's up. It's up. 236 up 11 Vive. Fuck. Why does it do that?
Xerox for November reporting its Q4 results. The revenue figure at $17.1. That misses the estimate of 17.9 million Sierra Oscar uniform November. So Q4 net loss at 7 cents compared to the loss of 15 cents on a year-over-year basis. Global and down for full year 24 revenue seen between 63 and 77 million US dollars against the 72.3 million expectation. Also, SoundHound introducing 2025 outlook expects its growth to accelerate with revenues exceeding $100 million US.
Soon has revenue.
Positive adjusted EBITDA, Sarah Oscar uniform November.
I didn't even know Soon had revenues. What was I looking at now? Oh, hold on. ESTC is out too.
Has its longest streak of monthly gains since 5 months ending July 2023.
But after-hours movers Hewlett Packard Enterprises trades down about 5.5% following its Q1 results and guidance. Hotel Papa Echo.
Oh, I X'd it out.
Following its result, has moved higher by about 5% in after-hours trade. For companies, Charlie Oscar Q1 revenues at $931.6 million that beat the $915 million expectation. Non-GAAP EPS at 85 cents per share beats the 79-cent estimate. Charlie Oscar. For companies guiding its full-year revenues between 3.85 to 3.90 billion US. Also sees full-year 24 adjusted earnings between 3.58 per share. That beats the 3.46.
How's everybody doing? NTAP. Oh yeah, NTAP. They had good numbers too. Let's see. There were a couple of interesting names today. Let's see. NTAP. Wow.
PSC Corp. Victor Sierra Echo Charlie announced
Wow.
strategic actions to expand the aviation
Damn.
market and also enhance its growth and profitability.
That's a big move.
Sierra
That's a
Echo
nice
Charlie.
move. It's a good company too, right? Yeah. What's up, Dan? What was the other one? Oh, ZS, right? What are they up to? ZS a little bit lower. That could be an opportunity tomorrow off a dip. Was it down 10? I haven't seen the number, did I? Oh, here. I posted it. Zscaler beat by 18 cents, beat on revenue, guides Q3 earnings above consensus. What was the bad news here? I wonder what the bad news is here. I don't think it's a sell the news thing. There's something they didn't like there. And what? Oh, ADSK. That's up. Tell you, you had some decent moves off earnings the last couple of weeks here. What was the other one again? Oh, Soon. Did Soon come out? Oh, yeah, I just heard Soon. Soon down what it was up today. They're losing all sorts of money, though, Soon. You're not buying that off fundamentals if you're in Soon. That's for sure. What else we got? ABPT, CERT. I think that's it, right? Big names. Oh, Dell. Uh-oh. Look at this. Do you believe this? 112? Oh my Lord. My God. These numbers were probably unbelievable. 172. Let me see. Did I see the Dell number?
US dollars, that's below the
Hold on.
analyst consensus for Franklin Sierra Romeo.
I can't even post it in. Hold on. Dell. So much flow in that Dell too. Dell beat by 47 cents. Increased dividend by 20%.
Fisker with the guidance. Company says it is unable to file its annual report. Franklin Sierra Romeo. On Fisker, company's net loss for the quarter at a loss of 123 per share. Company says substantial.
I just heard the Soon CEO was going on CNBC.
Fair value adjustment. Currently, this business outlook Fisker is targeting combined sales directly to consumers of approximately 20K to 22K vehicle units in 2024. Also expects full year ASPs in the range of.
All right, let me lower some shit. I got a headache from these squawks. Jules, take a nap. We're not done yet, Jules. No, I got a webinar, Jules. Okay? You got to chill out. All right. Riley, yeah, that thing's. Honestly, I thought it might even get beat up worse than this, but it's getting beat up pretty bad. This thing's got headaches. And the market doesn't give a rat's ass about these banks. All right, is it time? Yeah, it's time, right? Let's talk a little market. Nothing much as far as anything new to talk about, but we'll talk more about names throughout the webinar. Because there's been some interesting action in names. Market has broadened out. We talked about it. Oh, you know what I wanted to show you guys? I think I posted it only on the Steamroom webinar. Let me show you guys this. Hold on. Shit, I gotta track it down. Hold on. Bear with me. It comes up and then it goes away. Where is it? 1 second. Let me see. I might be able to find it easier a different way. Hold on. God damn. Oh, here it is. Okay. Um. All right. So, yeah, the market has broadened out. I'll give you guys an idea. Today was interesting flow wise in what we saw because the late push into the bell could have been end of the month related window dressing. You had is it a push in the Amazons of the world, AMD, which was pushing all day on fire today. AMD, Microsoft. So that was about the last maybe 15, 20 minutes of the day. But prior to that, it was kind of a sluggish tape at times, but the buying was interesting. There was some selective buying in cyclicals, casinos caught some action. Uh, Again, small caps have been participating. The semis, which were the strong suit of the market all day, caught some action. So let me post the top bets as well. And if I have to add anything, I'll add it tonight and post it again in the steam room. Hold on. Okay. So this is what the top bet list looked like out of today's action, right? So a nice mixture of names. You had two nice size risk reversals in casinos, which have been a tough trade, better of late. LVS win. Taiwan Semi has been littered with buying, caught another decent sweep here. AMD, I mean, this is one of hundreds of sweeps today. This one with a little more time. EMR, another strong name, not many people talking about, nice size sweep. Cart, we've been talking about that name recently. Aggressive buying in the cart had a nice move throughout the day. EL, Estee Lauder, Crowd. These are leaps. Crowd also reports on the 5th, but some big time leap buying in this CRWD. And semiconductors, Western Digital, and, we've been talking about Micron, Marvell, which is getting ready to report. That's going to be interesting into earnings, out of earnings, I should say. This Marvell hasn't really performed like some of the other hot semis. Sometimes this gets lumped up in that cyclical basket, kind of in the Micron ADI type of basket, but they are AI related, so it could have some catching up to do. And this thing has had some really nice action going back to late last year. We, even us playing on the more tactical side, have been in and out of this name off aggressive buying several times. All right, so okay, for if I mean, you worry about a rally getting long in the tooth, and what comes along with it is more crowded positioning and bullish sentiment. What you want to see is you want to see more participation, more flow involved. You want to see buyers, you want to see that appetite. They still have a quench for new risk, right? What gets worrisome when you get at this stage of a move is that they're just chasing the same names, right? And that's a sign, that's a caution sign, if anything, right? It can go on for a bit longer than you would like to try to reel you in off that FOMO, but when it that buying is concentrated and really starts to thin out, a lot of times that's a sign of some caution to get out of the way because we're due for a correction. As long as the risk appetite remains healthy, doesn't mean that a correction is not coming at some point, but it tells you there's still some strong demand out there, right? And unless something rocks that boat that we keep talking about, right? That shock that no one may be aware of, that new news that gets people to change that narrative out there. Um, a rally could go on a lot longer than any bear would like, right? And you know, even if you're bullish, right? Kind of, if you're bullish at heart like I am, you don't necessarily want to melt up. The corrections are healthy. And what happens is the longer you go without a correction, right? And the more participation, the more crowded the positioning gets, in all likelihood, the more aggressive that correction will be when it shows up, whether it's violent and quick or sometimes through time, right? Markets can correct through time. So that becomes the worry, even if you're a bull, um, of a market without those healthy corrections involved, right? So ideally, we would like to see it. And as we spoke about on this webinar and several of the members only webinars on Sundays, my fear, um, especially you see it in the price action and just the way the market's been acting, right? Every time you're worried about breath thinning out, breath starts to expand and more things get involved. That melt up looks more and more real each and every day. And I know a lot of you are saying, well, what do you mean? We already have melted up. I don't think, if you're new to kind of these bubbles in general, you haven't really seen a real melt up. When a melt up is when we're in full fledged melt up, there's not a bear to be found. Like, you're not going to hear anybody trying to short in a melt up, right? You're not going to hear anything out of that perma bear camp, and your jaws are going to drop to how long the market's been going in one direction. That ends badly, though. That's the problem with that, right? That ends badly because what happens is the market makes everybody into a believer. And when it's time for that trend to reverse course, you got a lot of supply that's hitting the market, a lot of people exiting through one door, right? So I think the best approach, from my experience, when dealing with this type of environment, is, again, what we've been beating the drum over. You want to be more reactive, right, than try to predict and anticipate. I know as traders, we always try to anticipate in some sort of fashion. But the more you try to predict the future, the further you go out and try to predict and anticipate what may happen, um, the more risk you take on and the more difficult it becomes on either side of the trade here, right? So you continue to go with the momentum, and in simple English, what that means is that if you continue to see buying in healthier setups, right? Even names that have moved, even names that are stretched in a sense, big picture wise, if they've consolidated, right? If they digest those gains and then you see sweeper activity coming back into the name and getting aggressive, even if you're not starting a position for the longer term up here, it's still tradable, right? So you could still have that tactical frame of mind, um, and minimize your risk of getting caught when and if the music stops, right? So the more buying we see coming into these little digestive periods, and the more names we see get involved flow wise, we want we want to still play. We want to still play, right? And again, to minimize your risk, right? If you have that uneasy feeling, and each and every one of us are different, right? If you don't feel comfortable, right, things are getting a little too bullish. You see shit like this, for example, that anybody who's been in the game as long as I have, um, always gets concerned when they see something like this. Hold on on the cover of a magazine like The Economist. Okay? These don't show up at bottoms, right? You see the complete opposite at bottoms. When a magazine like The Economist has a bull flying away with balloons, you know, you get concerned that things are getting a little too bubbly out there. And you can people this you guys have heard of the magazine indicator. This thing has been around forever. Has been back tested by many of people, and has been, especially at bottoms, a lot of times, has been a reliable indicator. The problem with tops is the timing aspect of it all. Right? Doesn't mean the market's going to stop right here and now, but a lot of times you see a correction within the next, whatever it may be, weeks, months after you start to see publications posting bullish covers, right? So if this stuff concerns you, and you have a right to be concerned, don't let anybody tell you otherwise. You can minimize that risk by doing a bunch of different things here, right? You protection we talked about. If you're too heavy and you're holding a basket of names and you feel like if you do get caught in the correction, it's going to sting, you can protect right now, right? You can continue to roll positions if you're in options as things continue higher, right? If and the majority are probably in some of these quality names, right? Like an AMD or a Meta or any of the semiconductors that continue to do well. If you're in options, I mean, Ranchero beats you over the head constantly. You got to continue to roll those positions, right? Take a little profit out, continue to roll. And this way, when and if you do get caught in a correction, it's not going to hurt as badly, right? You could put on protection. And if you're just for example, you're not looking to sell any of your long-term positions and you're okay with getting caught in a correction and you're only concerned about new risk here, the more tactical you are, right? The quicker you are to take profits and stop yourself out, whatever route you take, the safer you'll be, right? The shorter the duration, the less risk. If you're solely day trading right now, you can take down that risk significantly. But again, Lucci and Montero had great points earlier. A lot of the larger names haven't been the best to day trade, especially on the option side of recent. But you guys had an incredible stretch, right? Now we've been seeing some of the other stuff get involved. So, players in this game like myself, who I'm not trading the equity on a Melly $8,000 a share or a Netflix or any of these names that are trading at $500 a share, right? I needed to see rotation for me to get involved in a bigger way, especially on an intraday basis. And we started to see that. So I've been more active of late. All right. So again, not to sound corny, but there's no excuse if you are concerned, there's no excuse about still not getting involved and participating while at the same time being prudent just in case something rocks the boat here, right? So that being said, as far as what we're looking at right now in front of us, there is nothing, right? There is nothing that we see that we look at in the steam room that's showing any signs of concern, right? You have sentiment that's a lot more bullish than where it was 3 months ago, 6 months, 9 months, especially a year ago. Okay. But that's going to happen. That happens all the time with price action that looks like what we're seeing right now. Okay. But you still have non believers out there, right? You still have non believers out there. So we've talked about hedge funds. Did I post hedge funds? I didn't post it. Oh, I have it right on top of it. That's why. And you got hedge funds here who have remained short, right? They're still short futures. Okay. They still have been short futures throughout this whole entire rally. Okay. Going back to the October lows of 2022. Okay. And in single names, at times, they've been forced to cover shorts, right, and get long and chase. And we see that, periodically. Here recently, the market had forced them to cover that net short position. They got back to that neutral zero line, so net flat as a whole in individual names. And instead of chasing longs, you could see they dipped back to the short side in a small way, right? So they still haven't capitulated, right? And a lot of times when you get to these strong trend moves, okay, the market forces, especially if you end up getting into a melt up, the market forces everybody to capitulate, all right? So what this tells us, and a lot of us who follow positioning, right, especially from the hedge funds, it doesn't mean the market can't pull back, right? The market can pull back no matter what we're seeing, okay? But the pullbacks are likely to be more shallow, okay? Because what's going to happen if hedge funds are short, as the market moves higher and then you get a pullback, they cover that short. They're looking to exit that position. Okay. Now, again, if there's something that changes the narrative, you get that exogenous event or you get that shock, whatever it may be. Okay, that can happen at any time, no matter what the market's doing. Um, to where hedge funds would add short exposure on, right? They wouldn't be inclined to cover, they'd rather add more short exposure on. Um, that would be a different story, right? But without that, these little consolidations and these little shakeouts, we don't even get too many of them, but we saw one, let's say, last week off the CPI, then again off the PPI. You're more than likely to get this type of reaction than what we're seeing than any further selling, especially from this crowd, right? So they're pretty much the last one, the last big pillar left, as far as getting them to capitulate. Okay, this is on the flip side. What is a little bit concerning is retail, right, has been more in the bullish camp. Okay, so we could see, right, if there's something does enter the picture, you could get some selling. You could get some selling for a week or so to shake out some of this long exposure. But as we spoke about, usually what takes place is you see more of this into a top, right? So they get shaken out, they get back, they get shaken out, and then they catch them, right? When the music finally stops, they catch them holding a bag. All right. So that's kind of more how this plays out when you get up to these levels on the retail side. Because any little weakness shakes them out, right? Then the market rallies back and then they come back in. Then there's another shakeout. They spit up a little, then they come back in. And then eventually the market catches them as they add more exposure. Okay. So you got on the professional side, like hedge funds, they're non-believers still. Retail has participated, and but you see what we're seeing in the market too. Like it was the Mag 7 was the crowded trade. Remember that was a problem. Okay, and even though there hasn't been a crash, we were never saying the Mag 7 names were to crash. Right, they're good companies. It's got nothing to do whether these companies are good companies or not. The positioning was just too crowded there. So what we've been seeing out of this camp is that Mag 7 has broken up. They're already, right? You hear it already. They're talking about renaming it to the Mag 4, right? So you get that underperformance. And that's what you start to see little by little as some of these overcrowded areas consolidate a bit, right? If the market is still strong and there's an appetite out there, they go into consolidation, they go into digestion, they're still okay. If the market's okay, they're still okay, but you can find outperformance in other things, right? And that's what we've been seeing so far. Even a name like this, right? You get to a point, and we talked about this a couple weeks ago. Okay, you get to a point where this got a little crazy. Okay, can't do that forever, right? There's going to be some sort of breather that shows up, and you go into these little choppy consolidated phases where, unless you're really nimble, anybody trying to catch the big trade out of this over the last week or so is more frustrated than anything else, right? As you start to see other things outperform. So that's kind of what we've been seeing here, and that's a healthy sign for now, right? If as we continue to see that this rally, the longer this rally could go without an overall correction in the market, right? When when we stop seeing that, that's usually the signs that buyers and that risk appetite starting to dry up, and we're due for just again a normal correction that would be healthy, big picture wise. Here's the other thing too that really, for me, um, is not flashing any major concern. Again, can the market pull back? Yes, but is this sub bubble that needs to explode today, and the smarter money out there is positioning for that? I mean, this is what we look at Sharpies, right? In index futures combined, and they are uncharacteristically still net long index futures. Okay. That's rare, extremely rare. Because what happens, the way they usually treat markets is they will get long when the market sells and nobody wants to own it, right? And then as the market appreciates, they will slap on hedges, okay? And the longer that rally extends, in all likelihood, the more aggressive they get as far as putting on hedges. Why? Because to the point I made earlier, as a rally continues to go higher, the more bullish people become, right? The more crowded that positioning becomes, and they're taking the other side of that. So again, an example uh, in late 2021, you could see as the rally extended, here's that zero line, they were hedged, and that last quarter of that rally, that's when they got aggressive adding hedges, because that's when the other side was getting more aggressive and more crowded on the long side. We haven't seen that yet. Now what's likely missing here is this, right? When you see more on futures than this is individual names, but when you see hedge funds finally capitulate and chase that long, right? That's when we'll probably see Sharpies um, start getting aggressive and hedging that long exposure. All right. So it's hard for me right now to have, to be concerned about anything major going on the positioning front when Sharpies are still net long index futures. Okay. Now, I want to make this clear because I get this all the time. It's more new traders than anything else. Does that mean the air can come out of a bubble out there in certain pockets and certain names? Of course not, right? These are index futures as a whole, right? We're talking about the markets as a whole here, not individual names. So you could have, anything. I'm giving an example, not like it's going to happen, but an example. SMCI completely crater for whatever reason, and Sharpies aren't paying attention to that, right? This is more big picture than anything else, right? The point I'm making, you could get rotation, aggressive rotation in different sectors, okay, but they're not showing concern in the overall market, right? So while this remains the case, and I know it's a lot to digest when you go one by one, but basically, until we see a major shift in positioning and or sweeper activity go dry, right? We just see buying in AMD and whatever other big name they continue buying, nothing else. We want to remain active. We want to try to take advantage of this momentum while it's around, right? Plain and simply put. And again, depending on your risk tolerance, depending on how you feel about the environment and anything else, you can be a lot less aggressive than the person next to you, or you could get a little more aggressive. But you just got to know your risk when and if that narrative starts to change, because it can happen quickly, and you want to be on your toes, ready to adjust. Okay. So that being said, again, nothing changed big picture wise. Um, the thing that probably worries me the most is things like that popping on a magazine cover, like I just showed you. Um, that people are getting a little too excited out there. But even like credit signals, okay. And again, not that we would expect to see anything here, but the market um, has chopped around for a couple days. Here are like credit default swaps and some of that stuff we follow. Look at that. Not even a pulse. Not even a pulse. So there's, and we hear McElliott talk about this a lot, right? Until you need that shock, you need that catalyst to flip that narrative. Okay, you can't predict it. You can never predict it. Now, when some of these other things we just looked at, all right, like hedge funds, Sharpies, and flow, okay, when they get to a point where they're stressing caution to us, we don't want to necessarily wait for that catalyst, because what could happen is the narrative and the trend can change off just price action itself. Doesn't necessarily need that catalyst, right? If buyers have exhausted themselves, there's no one left to buy, markets can turn on anything. It doesn't have to be some dramatic news. Okay, it could start to turn, I should say. All right. But while we still have some of these things that are saying, look, right, the backdrop's still okay. If we still see sweeper activity and things you like, especially for trades, fire away, right? Um, the thing that gets in the way of that is some sort of shock or some exogenous event that pops up, right? And when and if that happens, again, if you're holding on to long positions and you've done some of the things we spoke about at the start, you don't have to react in an aggressive way right off the bat, right? The market starts to sell off some news. That's where we want to pay attention to things like this, right? This will tell us how serious that news may be, right? How important that news may mean to the credit markets. And that can give us a lot of information whether, if you're long, you want to start to aggressively lighten up, or you want to sit pat and possibly look for a long opportunity as some of that stuff shakes out. All right. But we got to get to that point. You can't anticipate or predict that stuff. You got to be able to react to it. Right. And that's it basically. Anybody have any questions on the big picture front? And then we'll start. We'll talk some names. Anybody have any questions on anything we talk about week in week out, big picture wise? No, good. All right, so let's talk about some names here, right? These are names too. I think if we do get into some digestive phase, you want to keep an eye on, right? What we've seen is this broadening out of not just in the price action flow, and it's hard to pick as it's happening. It's hard to pick up on what's taking place, right? But what we've seen is this AI theme, which started as just NVIDIA, right? Then went to an AMD, then went to some of the other semis, right? It was pretty secluded to just that spot, right? To the chip makers, and Mag 7 participation. But what we've seen change from the recent October low is that trade really start to broaden out into other pockets of the market, right? Not just chip stocks. So this is Goldman's basket. I think they call it like AI infrastructure, and you could see the different type of names that they have on here. The majority of them have been doing exceptionally. Okay, from an Eaton, Fair Isaac, Motorola Solutions, DLR, which is a REIT we spoke about, right? Data centers. That's the whole theme. Data centers is what they're focused on. Um, APH. A lot of these fall under industrials or just even infrastructure plays, but they have been benefiting, even if they're not benefiting off AI fundamentally yet. They are starting to get recognition as an AI trade, right? And that's what's been really the most constructive in the price action and the flow that we've seen since the recent October lows. And the majority of these names have been large cap. We have seen it recently spill over into some of the smaller issues. But a name like Flex, I don't know if you guys remember, Steamroom members do, but this is a name we've talked about for a while, right? Has gone into consolidative periods. Um, Teenager, what traded in the teens, slow mover too. This is like a big move for this stock because it's a slow mover. But you could see what this looks like now, right? So it's not solely mega cap, large cap names. It has spilled over very gradually. But we want to see this even more so whenever that correction does show up, whatever it may look like, whether it's a more violent 1 month correction or whether we get a 10% correction over the course of 2.5 months. You want to really keep an eye on a lot of these names because more than likely they're the ones that are going to lead us out, right? And hopefully the flow will accommodate, right? We'll see the flow. Some of these buyers continue to come back um, and revisit these names. So interesting. Again, I posted in the room. If you want to hang on to it, I got this. But this is something we talked about, like on that growth scan that we've been looking at. A lot of different type of names showing up. I saw an IBD article about CLFT AI related. Really, I didn't know CLFT. So CLFT is what now? That's wait CFLT Confluent. That is. So this is software. This is software, right? Yeah. Yep. So yeah, kind of to that point, Dan. Um, we've started to see a lot of these. Excuse me, I knocked my headset. This headset, I got to get this fixed because I got wires wrapped around my neck over here. We're really starting to see it spill over, which is a constructive sign. So again, if the market continues higher, you want to see kind of like Dan's bringing to our attention some of these newer type names that are starting to catch some recognition, right? But even more so if we go into a correction. Because here's the thing too: if we do go into a correction, you got a good amount of stuff that we all know about that's rallied significantly, right? And if we do go into a correction, they're likely going to continue to do their thing. I'm trying to think of. I always draw blanks, but just to give an example, like this, right? So you go into a correction, and more than likely this will do something like this, right? That's what they do. Maybe even a larger pullback than that if these things have been running for a while. And that's where the entries come on these things if you want to revisit them, right? But at the same time, as you have a lot of these names that look like this up and to the right, as we've seen recently, you have names that really haven't participated, especially on the cyclical side. So what's going to be interesting to keep an eye on whenever that correction shows up or that pullback shows up, is it more of rotation than an actual correction in everything? Or maybe you even get a little bit of correction in the cyclicals. Maybe they revisit those first, right? Because they haven't rallied as much as some of the other stuff. As much as there's stuff out there that looks bubbly and has gone crazy of recent, uh, there are a lot of spots in this market that are far from it. So that's what I think we got to keep an eye on. And it can happen. You don't even necessarily need a correction for that to happen, you know, without you even realizing some of the overextended names will just start chopping around, and you could still trade them, but they stop making new highs. They go into consolidation for a couple months, and the money rotates out of those names and looks elsewhere for opportunity. So those are the I think those are the dynamics I personally want to keep a closer eye on, rather than is this market topping and going to crash, or are we mooning? Right, because that really doesn't help you here. Right, trying to buy puts because you think the market top, you'll go broke doing that. You go broke doing that. And at the same time, buying a basket of risk up here in names that have already ripped hard, and then getting caught in them is going to be just as painful. So looking at the market through those lenses don't do any good here. Don't do any good. How do I feel liquidity factors? Well, Bill, here's the thing. Liquidity, and I'm being upfront and honest with you. Liquidity is not my niche. It's not something I study and examine. I've seen as a whole more people, the more they get wonky into those liquidity factors, the more they almost outthink themselves, overthink themselves out of opportunities in the market. In other words, when you're worried about the bank facility that Yellen and Powell orchestrated to bail out the banks coming due in March and being a problem, or the repo market being a problem, you could see how that can get in the way of opportunity. All right. So I rely on others to I rely on other outfits to examine that for me, and I look at that information and take it for whatever it's worth. But as a whole, okay, the only thing I pay attention to is you had liquidity that basically was a burden, right? The liquidity backdrop was a problem for risk assets throughout 2022. Okay. Then that changed, and it drastically changed off the October lows. As of right now, again, not trying to predict the future because I have no idea. If you told me that Powell and Yellen were going to allow the economy to run hot before the inflation has vanished and before we started to see the economy slow down in a sense, right? I mean, rate cuts, I thought if the Fed was going to talk about rate cuts, for that even to come out of their mouth, we would start to see the effects on the hikes and the tightening of liquidity on the economy. Like, you would start to see problems. And then the Fed would have to cut rates. But again, because it's an election year, you're seeing a different tone out of them, especially on the action side. They look completely different, right? And no matter what liquidity measure you look at, it stopped draining in the October of 2022 and has been abundant ever since. Okay. The point I'm making is I don't know what liquidity is going to look like a month to 3 months from now. All right. But it's something you will likely need to react to if it looks different. Okay. And again, I look more to the credit markets to do the homework for me. Right. Oh, I don't have it here. Let me post it a second. If we're starting to see some concern out of the credit markets, oh wait, I did post it, didn't I? All right. So this is the point I'm making. When liquidity was a problem, this is what credit markets were showing us, right? So as this increases, this particular indicator on credit default swaps we're looking at, right? That is telling us risk off. Okay. The risk assets, equities are not going to make any headway when credit default swaps are widening out like this. All right, you could see Okay. And then the opposite, when they stop doing that, you can see what happens to risk assets. Okay. So it's no coincidence. The point I'm getting at is that liquidity was a problem here, right? The interpretation from the credit markets and from those October lows has not been a problem since, especially off the recent October lows, right? You can see how aggressive that move has been. Risk, what this tells you here is risk has been sucked out of the market, right? Whatever the credit markets were concerned about here, you could see how that got sucked out of the market off those recent October lows for whatever reason. Doesn't even matter the reason to me. So, not to brush your question off, right? And Bill, I'm sure it's important, but I can't try to handicap that stuff. I don't even want to try to handicap that stuff. Like what happens when the reverse repo goes to zero, and because I don't look. I mean, look what the last time we had repo issues. The Fed did something about it, and it acted like a liquidity catalyst, and risk assets ripped. So maybe the reverse repo market poses as some sort of friction in the market. We get a little bit of selling, and then Powell does something about it, and you forget that little blip like it never happened. You understand? So again, something we want to react to instead of try to anticipate. Does that make sense? Listen, I get it, right? Whenever you place a wager in anything, you try to predict, you try to anticipate, right? Even I'm telling you now to try not to anticipate and predict and try to react. You're probably scratching your head saying, well, you have to try to predict or anticipate, even in a small, you have to, right? But the less you do, the better off you are. You understand? And it applies to things like this. If we get a little bit of selling and I see the credit market signals that we follow starting to react and show some caution, that's something I want to react to, right? If I see that starting to manifest, I'm going to react to that and I'm going to put the gun back in the holster and sit on my hands and wait for that to play out, right? I'm not trying to predict what's going to happen. I'm reacting towards it. And the same thing here, right? I mean, this rally, even if I didn't predict this rally, which many people obviously haven't, okay? If you reacted to what a lot of these signals were telling you, you still could have made money off of that setup. So I understand that the big payday comes off laying down a wager and predicting something big that's going to happen a couple months out. But again, it's a lot more risk and a lot more difficult. And me personally, I don't want to be a part of that right now. And I suggest if you've had some trouble trying to predict what's going to go on economically or with liquidity in the market, you take a more reactive approach towards things. Okay. And listen, those of you who know me know I don't like to, I'm not a bragging guy. I'm humble and I tell you when I'm completely off, and I'm completely off often, just like any of us, right? This whole bull move, this whole entire bull move, I was suspect on from the get go, right? The whole entire thing, right? A lot of things that even with the experience I have, didn't turn out anywhere near the way I thought they were going to turn out. And that's a common thing in this game for all of us. That doesn't go away no matter how long you're in this game. But, while what I'm saying about reacting instead of anticipate, instead of me being stubborn and be like, no, this is not a bull market and I'm not going to get long anything, or I'm going to short this whole rally all the way up. You understand? You can see how that could be a problem. But instead, I took a reactive approach. And even though maybe I didn't get as aggressive as I usually am on the long side, if everything lines up the way I would like, I still am going to be a part of it, right? I'm still going to try to make money off it. Right? It's just I be less. I'm taking less aggressive and taking less risk because I don't feel as comfortable because things aren't involved that I would like to be involved. So, but the moral of the story is what I'm trying to get at is again, we all, for whatever it may be, and you got to get that out of your head as a trader in this game. We all like to, you see it in social media, you see it in chat rooms, you see it all over. People making calls and they want credit for it. Okay. If you're trading your own book and you're playing with real money, that's the least important thing for you to focus on. Right? Making calls and having somebody pat you on the back saying you were right. That is no good comes out of that. If you're trading your own book, that's the last thing you should want. Right? You just want to make money and not lose money. That's what it's all about. Right? And sometimes in this game, you're going to have that conviction and things are going to line up and you get a little more aggressive. And if they pan out, you get really paid. Right? And there are going to be other times where you were thinking it was going to turn out something different and it didn't, and you need to react to that and try to make some money off it. But those stubborn players that you see with the biggest mouths on Twitter, the ones that in every tweet they say, I told you this and I did that and any trader that uses the word I is full of shit. Plain and simple. It's full of shit. But that's the moral of the story here, guys. Just we want to react. And from this point, I think it's even more important than anything else because there's no one knows, right? No one knows whether this turns into a full-fledged melt up. Is there a correction before it turns into a full-fledged melt up? Does something happen a month from now that turns everything upside down and we go into some vicious correction or bear market? Nobody knows. Trust me, nobody knows. That stuff can't be predicted. So you want to be able to react to it, try to make some money off it, and always pay attention to what risk you have out there if you get caught. You heard it here first. You know what I'm talking about, Robert. They're all over the place, right? All over. I told you this was going to happen, or I told you. Anytime you hear that, they're full of shit. They're full of shit. And like we spoke about in the past, you go through cycles in this market where certain people are going to look good during those cycles, right? If I'm on social media pounding AI stocks or large cap stocks on the long side, the last couple months, I'm going to look like Nostradamus, right? I mean, I'm going to look like I'm the best thing since sliced bread. And a lot of the newer traders think, oh shit, this guy on social media, he was sent from God. He'll never lose. But what happens is the environment changes, right? And whether you go into a correction or a bear market or even rotation, that guy is not going to look so hot anymore. And at times look completely wrong. We saw it throughout 2022 in the bear market, right? I mean, there were people pounding the table all day long like they never had anything else to do in life about the apocalypse happening, the end of the world coming, the markets crashing and collapsing, right? Recession, the Fed never did this, we're dead, blah, blah, blah. They had us 3 feet in our bunker. And as the market corrected in 2022, they looked like they knew their shit. Oh shit, this guy's been bearish, he's been right. Right? Even some of the big analysts, which is totally normal, but people are surprised by it. Like a guy like Mike Wilson. who had a great call at the start of the bear market and was right for what, 6, 9 months, and then overstayed his welcome. And now Mike Wilson can't get a cup of coffee from anybody right now. All right? He's still Mike Wilson. He's still really good at what he does. But, certain cycles, he looked better than others. That's just the game. It's just a game. Kalanovic too, dead wrong. And let me tell you something, okay? And they can troll Kalanovic all they want on social media. Kalanovic is one of the sharpest guys on the street. Okay, he's been around a long time, reputable, credibility. He's got, everybody knows who he is. All right, doesn't mean he's not wrong. Doesn't mean he's not wrong in this game. People are wrong. But when you make calls, right, and you're not risking your own money, you can go out there and pound the table on these calls. And when you're right, you're going to look like a genius. And when you're wrong, you're going to look like a jackass, right? When the market goes into melt up mode, Tom Lee looks like Jesus Christ. In 2022, Tom Lee looked like a fucking donkey. I mean, right? Nothing changed. Tom Lee, still a smart dude, a lot smarter than I am. He knows his shit. But nothing changes. Cycles change. That's it. Right? But for us, right, when you're a gambler in this game and you're playing with your own bankroll, okay, you can't do that. You can't do that. You get buried. Right? You can't take that stand, pound the table, right, and look for that clout and lose all your money while doing it. You can't do that. Right? So there are times when you're going to feel or you're going to see something, how things may turn out, and they picture perfectly. They play out. Right? And at those times, you're going to be able to have that conviction to get more aggressive. The trade is working, blah, blah, blah. And you're going to make a lot of money. And then there are other times where things are going to surprise you. They're going to catch you off guard. You were looking for something else. What you want to be able to do is understand, okay, I was obviously wrong, but I'm not just going to sit here and be stubborn about it. I'm going to try to make some money while this is doing this, plain and simple. Right? And even though you're not going to make as much because you didn't have that conviction, you're still more than likely, especially on the long side, you're going to make some money out of a situation that didn't play out the way you were hoping it would. So I think right now, no matter what, I think right now it's prudent to have that mentality no matter what. No matter what. Because nothing surprises me in this market. Nothing. Like, I could see any scenario out of this. I could see this market melt up and look bubblicious and people's jaw drop, right? Completely nuts. Or at the same time, I could see, some really negative catalyst take fold and turns this whole entire thing on its face and buries every bull. I could see either scenario just as easily. All right, but the point is no matter what scenario it is, you want to try to react instead of predict it. That's the moral of the story here. Yeah. Yeah, they used to bother me, Khalib, when I first came on Twitter. I used to get into brawls with these guys because, you call them out and that. Now I don't. Because you know what happens? They come and go. Those guys, they come and go. I promise you. They come and go. When things turn upside down, they go. That's it. They vanish. You remember. You had guys when the Kathy names with COVID. You had guys on Twitter. They had so much power of followers. They were manipulating smaller cap stocks. And they got caught doing that. But you know what I mean? They come and go. What does a melt up completely look like? Honestly, I really like. I can't even put a number on it because I don't know. I really don't know. But I could see, like, if you talk about like a scenario where the economy is resilient and the Fed and Yellen are going to allow things to run hot because of an election year, you could have things get really crazy on the upside. You could have things go really, really crazy on the upside. Because again, that's what builds up these bubbles. The Fed are notoriously known for, inflating bubbles, doing just that. Doing just that. Right? So if they're going to prop things up because it's an election year, because here's the thing too, B, is that inflation's not a problem. Right? We talked about this. Inflation, what happens during inflation, when you have some inflation, asset prices appreciate. Okay? Housing appreciates, stocks appreciate, goods appreciate in price. What's bearish about inflation is what the Fed has to do to combat inflation from it getting out of hand, right? So they got to drain liquidity and hike rates. That's what happened in 2022, right? So it's their reaction towards inflation that's negative for risk assets, right? But now, if you're going to tell me this year you're going to have inflation remain a little sticky and the Fed not do anything about it, right? Or maybe even be more accommodative, you could see a scenario where things can get a little nutty. And on top of that, think of this, right? You haven't had full participation. You haven't had full participation in this market. You go through a few months of full participation. I don't know what that looks like. You know what I mean? Because again, that's what a melt up. No, you can't predict what the levels in a melt up because it always, again, it gets your jaw to drop. Like you look at what happened in the late '90s, it was insanity. It was insanity. So nobody knows, but it could get crazy. It could get crazy. Again, to my point, I think if you're a true bull at heart, you don't want to melt up. You don't want to melt up. If you're a true bull at heart, will you want right now, this minute, you'll take a correction. You'll take a correction if you're a true bull at heart. Why? Because the correction resets positioning, resets sentiment, has a lot of these overextended names digest gains and correct. And then once that runs its course, the move that follows is you could throw a dart and make money. Right? You could throw a dart and make money. Like, think about what a correction would do. You get all these speculative Johnny come latelys, they get washed out completely. Okay? You reel in bears again, you reel in shorts again. And then when it's time for that to turn, that unwind of that is a beautiful thing. It's a beautiful thing. Because that entry off that correction is ideal. So, again, that's the true bull at heart. Because, listen, I'm a bull, I'm long only, and I'm a bull at heart. Yeah, I'd rather see a correction than a melt up. Because the melt up, you don't, again, like I just was telling you, you don't know when that comes to an end. You don't know when the music stops. So it's like you don't want to keep adding risk and then getting caught, where a reset, you get a correction, a reset, and then you start to see constructive signs that correction's over. You could start adding weight there, right? You could put on more weight now that the correction is over with. So it's a different way of looking at things. Thank you, Rocco. How long have I been? Oh, I got into the market in 97, Rocco, 1997. So when I got into the market, there was a Russian currency issue, and then you had the Asian contagion in 98 that felt like a crash. And here, to my point, like 98, okay, October 98, you had a pretty vicious correction. It was only a couple months, but like some of the leaders, the high flyers, corrected minimum like 30, 40% off the highs, some even more. And then you know what followed, right? Coming out of 98, you had that bubble run in 99. So those corrections, it's almost like it gets reeled up again. You get more force and more lasting power out of it. We were looking at this on Sunday night. Here's what it looks like. Watch. All right. So here is you can't even see it on the chart. How is that possible? Look at this. Okay. This is 97 here. This is 98. Wait, how could this be? It wasn't this short. Is that right now? Hold on. It might be right. It doesn't feel that short. Is this a weekly chart I got on? Hold on. All right, so this is 98. That can't be that short. Could it be that short? Less than a month? From 980 to 850? That doesn't look right? Anyway. Yeah, so I'm in since 97, Rocco. Just need 4 or 5 days of selling. Yeah, that's the thing, right? I think and here's the question I asked too, Sahil, that there's still a good amount of people, both bears and bulls, that want a pullback, right? And you usually you don't get those big pullbacks when you have that type of emotion out there. Bulls who obviously missed out on certain names or didn't participate as much, they want a correction, like me. And bears who think the world's still coming to an end, they think a correction's coming and predicting it. And when you have that, it usually doesn't show up that easily. Oh, here, this looks more like it. Why did it look so different on that chart? Here it is. So this is 98's correction. Okay? So you had pretty bullish move, right? 97, little quick correction there. 98, right? And then this was the correction 98. I remember saying to myself, I just got in the game. I think it was like late 97 when I got into the game. In 98, when the correction happened, the firm I was at, there were people quitting. They blew themselves up in the 98 correction. They got too long. They were on margin. Options weren't even a thing back then. And they blew themselves up and they had to quit the business. Right? So I'm saying to myself, I just got in this game and there are people leaving this game right now. What the kind of timing is that? Jesus Christ. And then as they were leaving and blew themselves up, thinking, that's it. It was over. The market bottomed and had the strongest rally, even stronger rally to come out of it, which was 99 into 2000. And that move was just, and this is just the S&P. Forget what the NASDAQ looked like. But that move was ridiculous. That move was ridiculous. But you see this stuff here, like even in stronger markets, you get these little digestive periods. I think, and that's what I'm saying. We got to pay attention to. So even if you're just trading, right? Even if you're not playing for a melt up and you're just trading, these digestive periods, they have a lot of information in them, right? You're seeing what kind of flow is coming into them. You're seeing what credit markets are signaling, right? So there's information to gather from these little digestive periods where you can say, all right, an opportunity to get long something for a trade, even if it's just for quick trading, or you got to be concerned. And look, this is throughout that move. It's not a straight line. You know, and this is what I was telling you. Who I was talking to, D or somebody. The beauty of a correction is this: after the correction is over and it turns, see this right here? That's meat right there. That phase is a beautiful thing because you literally could throw darts, right? Any sweep you see that looks good, boom, buy that, buy that, buy that, because they all rip during that first reversal. You get that pent up energy moving in the other direction. So, but you want these corrections, and you want to be smart about it too, especially this market, right? You want to look for that stuff as an opportunity. See, like even these things here, I ain't just telling you. There's no seller. There are no sellers. There are no sellers. What you heard? Rumors Portnoy? What? Hold on, you blocked out there. Ah, is he still doing his thing? Is he still day trading? Please tell me no. Or did he quit? That's the stuff I definitely don't want to see. Buy that fear, sell that greed. That's the truth, John. I mean, listen, it sounds simple. That's obviously to live by in this game is exactly what you just said. The problem becomes there's a lot of in between, right? Sometimes things are bearish, but you don't necessarily have that fear yet. And sometimes things are bullish and you don't really have that greed yet. It's more of a process. But to your point, for me, I agree with you because that's where I like to get most aggressive when that fear unwinds, like you're saying, right? So you get that correction, you get that extreme fear and positioning, and then you get the turn, and that's where I like to get most aggressive. The problem with this market, right? The way not just the October lows were cleaner, but going back to the October 2022 lows, it took different shape. It was different form, right? You had where it was just Mag 7, leadership, it was a defensive trade. You had the banking issues on fire, right? Coming out of last year in May. Um, Off the October lows more recently, last year, it was a lot cleaner, more bull market type behavior. Prior to that, it didn't have any bull market characteristics. Not making excuses, but that's for me to get aggressive. Like that's what I need to see, right? I like to play names. I'm not just going to buy the Meta and the whatever Amazon or whatever name is ripping that month, and just keep buying them. I need new names for me to take an aggressive approach. But everybody's different. Everybody's different. Listen, no matter what, the only thing you want to avoid That's what we talk about all the time, is being a wise ass and trying to short that trend, right? It just doesn't make any sense. Doesn't make any sense, right? For a profitable trade on the short side, for just that, it doesn't make any sense. Not necessarily what you're even going to lose, like just the opportunity cost, right? You're not participating at all on the long side, and you're losing money on the short side. It doesn't make any sense to me. It doesn't make any sense to me. But you know, people do their own thing. To each their own. So let's talk some names here, right? Because again, nothing really new about the market as a whole. Let's talk a few names before we wrap it up. There's been plenty of biotech names. By the way, I know a few of you in the room caught it. Anybody else on this webinar catch this VKTX? Anybody roll the dice? I give you guys credit out there who bought the equity, the common, and held that. You guys got a pair of coconuts. I give you credit. But this was something else, huh? This was a big winner. Snow, they bought the dip. Did they buy the dip heavily? We saw a little bit of flow. I'll take a peek at the OI changes tomorrow. Let's see. Snow. Yeah, it's not. I mean, it's not the end of the world. It's not the end of the world. The dip. Yeah, I think people were more concerned about the CEO leaving, right? More than anything else. And this, I think, you're going to see whether liquidity plays a big role or not. Because again, what's been happening recently, we're starting to see the more speculative stuff, right? Remember, we were talking about it's been mostly quality that's being bought up, right? Profitable names that are growing, all the fundamentals are there. And more recent, there's a lot of stuff. Fundies be damned, right? They're buying based off hype. You got Bitcoin ripping. Obviously, the Bitcoin miners ripped. You got some of these AI spec names we've been playing, like this piece of garbage that I played, BBAI. Um, like this is not quality. This is AI hype. So we'll see how long that lasts. Because what we could see a continuation of, and again, maybe it's just a digestive phase that's needed before we do, is a focus on quality again, right? Real companies making money, growing their profits. But we've been seeing that list expand. We've definitely been seeing that list expand. There's a lot of names, even this Dell, right? We saw a lot of flow in this name, a lot of flow. And we saw flow in this name before I even thought Dell could be an AI play. But you see names like this. Look at this. GE. Look at this. You got some strong ass names out there that people are unaware of. This is like on that infrastructure basket, the ETN. Look at this stock. So then you see, like, you're getting to a point where, right? I mean, this happens, and then you get something like this in these names, right? So now, is it the whole market that acts like that and that causes that, or is it just going to be in these names that are overextended and the money rotate into stuff that is not as extended, right? We've been seeing a little rotated, like CART. Again, this is not really quality, but right, this is not overextended by no means. Right? I mean, this was actually a nice little setup here, risk reward wise. The casinos we saw action in today, right? These things have been a tough trade. They're not overextended. Look at these things. So we'll see. Root, that's right, Ed. That's like Spec City. Root. Yep. Oh my God. I didn't even see that. Oh my goodness. What the? It's funny because I've heard you talk about it. I heard people talking about it. I didn't even pull up the stock recently here. Oh my God. What a squeeze. Crazy. No, I didn't. No, I know you. If the one I know you've been playing it, you owned it and made money with it. I just didn't see the move in the stock. XBI put by I don't remember it, but they've been hot. These little biotechs. I think there was a put spread too, right, Khalib? Again, this especially we've seen them all over the place. These little biotechs, they've been going bananas. That's another speculative part of this market right now, right? No fundamentals there. They're not known for their fundamentals. What else? Anybody have any good looking underbelly names? A lot of the underbelly names that I liked with fundamentals, they all really hatched now. Look, PSTG, they had earnings too. Boop, right? We talked about this already. APP, VRT. Look at this. Look at this. How about this? VST. Okay, this is not tech. This is a utility. Look at that. You know how much sweeper activity we saw in this thing? Who the hell was going to hold this anyway for this type of move? Not me. That's for sure. You've had some hot names out here. Oh, Nutanix, right? That was one. Chegg, that's a utility too. Let me see. Oh, this is utility. Okay, I thought it was an energy stock. Wow. Holy cow, Ed. Nuts. ACMR. Oh, yeah. This had earnings yesterday or the day before, right? Yeah. Yeah, see, these things are just really coming to life here. Off earnings. CVLT. Oh, I know this one here. Yeah. Yep. You got retail, right? We talked about this name, Dick's. Just it seems like it goes up a little every day. Another one I missed that I had my eyes on for a long time. Owl, that's private equity, right? This looks good. Damn. That looks good. Look at this stock. Is this private equity, Hailstone? This is I think this fits in like this sector where we saw some flow in this guy too. This ARES and stuff. Dixon Hims spare trade. That's another one had a nice reaction. Hims, right? And you guys know like ANF. We talked about that. Look at this move. Look at this move. Leo, I saw the Dell numbers. Unbelievable. Incredible. No, so like Dell, this is what I mean. They were buying this Dell, right? And you look at the numbers and the growth, and it's been there throughout. Now on top of that, these numbers are getting better, and the AI hype is starting to sprinkle in, right? We saw this a re-rating here too, IBM. I mean, look at the re-rating here. Did you see the quarter they reported? Look at this. Craziness. This probably goes higher. This probably goes higher. So, but that's the thing I'm most constructive about. I liked see now we have a little speculative behavior out there um, in the small caps and some of these AI names and shit. But prior to that, it was a very quiet broadening out of the price action and flow we've been seeing, which is really constructive. That's why I think even just a digestive period to get some of that fever pitch of speculation to calm down. That's really constructive. I like that. Like you have the perma bears that it's just the Mag 7 names. It's just the Mag 7 names. The Mag 7 names aren't even leading anymore. You know, and they have no idea. Like, is this Mag 7? Right? Is this Mag 7? Right? Is this Mag 7? You know what I mean? And now, not only that, it started to spill over from the mega caps down to the large caps and then like some mid caps. You know? So that's a good sign. Well, here's the thing. For that to happen, like if you don't have the Fed greasing the wheels here, okay? If you don't have the Fed implementing QE and sprinkling liquidity all over the place, you need the fundamentals of these things to cooperate because that's ultimately what drives these stocks higher. If it's not the Fed rigging the market, fundamentals are the only thing that can help these stocks trade higher. So the point I'm making is that if you don't have an accommodative Fed and Treasury, and depending, what's the definition of accommodative, right? QE, right? I mean, think about what got thrown or into the market off the COVID lows. Like the Fed rigged the game, plain and simple. So we don't, even if things are running hot, we don't have that per se. So you're going to need those fundamentals to cooperate. And what we've been seeing is we're seeing it spread out. We're seeing it spread out. You're seeing a lot of these companies all making money and growing. Yeah, IWM is getting dragged along for the ride here. Getting dragged along for the ride. So no matter what, even if there's not a leadership change, you can probably buy dips in the cyclicals in IWM. They should continue to do okay, even if they don't lead, outperform. But yeah, IWM has some catching up to do. And here, like this thing we look at, right? The equal weight S&P 500, right? This is just really like starting to move here off the October lows. Prior to that, you had nothing. Right? You had nothing. That's why for me it felt different, right? Off this October bottom than this period. This felt really thin to me. Just the Mag 7, painting the tape and stuff like that. This has been a lot healthier. So we'll see. We'll see how things shake out here. But in the meantime, again, guys, react, right? Especially off pullbacks. You see some buying coming into a name, looks good, set up well for a trade. And we can remain nimble and tactical and still participate, still make money until the music stops. Okay, so there's still ways to take advantage, whether you're cautious or not, or you're more bullish or not. But at the same time, you gotta be careful because you don't want to get caught with a basket at the end, right? So you got to pay attention, guys. As always, I appreciate you guys stopping by, talking some shop. Enjoy the rest of your night. And I'll see you mañana. I'll see you in the morning on the broadcast. Have a good night, everybody.